This is the talk of Music City Real Estate.
Welcome back to another episode of the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
My name is Monty Moore with Realty One Group Music City.
Hey, and I'm Carey Ann with CMG Financial and my mortgage team.
Every week we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com. That's questions@talkmusiccity.com.
Monty.
Carey Ann, you were amazing at last week's class, and I really appreciate you bringing some more of that gold to us today. And because it seems like, I don't know what the ratio is out there, maybe you have a better handle on it than I do, but it seems like at least 25% of the business going on out there is with investors involved.
Yeah, investors, there's quite a few out there.
There's lots of them.
And I think sometimes people forget, they're like, oh, I'm working with an investor, or, an investor could just be the client who just sold their first house to, right?
Absolutely.
I mean, so don't get confused when it comes to who's truly an investor. Now, there are some people that are just out there to move their money and put it in positions, to gain more, wealth through real estate. But I think it's important to know all the good that you as a real estate agent can provide through finances if people don't have true cash as an investor.
Yeah, you brought up some things the other day about, about pulling equity out and buying property and making that equity work for you. Mm-hmm. I think that's, a fabulous thing. Connie and I are looking at doing possibly the same thing. I just making that while the interest rates are still, and to me, they're still low. I mean, I know people are whining about 4% or whatever. To me, it's like, shut the hell up. Let's go back to when I got involved, and it was, 16, 17%. I mean, there's something to whine about there, and none of us like a higher rate, but you're right. So many of these people have been born into this kind of a rate, below 5%. That's incredible.
I mean, there was a time where 3.25%, and then we went to 2.25%, and it was funny. We couldn't even get people to convert at 2.25%, right?
I know.
But I think an interest rate is just what it is, right? It's just a rate, but it has to. I mean, we've all been in the economics class that tells us that has to make a shift here soon enough for all of us to keep going. But so I thought, before we get started about, sharing a little bit more about the different investor types of loans out there, maybe we talk about our amazing sponsor. So very grateful for Music City Removal. They are the #1 junk removal service in Nashville. From residential, commercial, and construction, they're experts in ridding you of junk. From their costs include labor and dumping fees without any hidden or added expenses. So whether you need a full clean out or just one item removed, they have you covered.
The Music City Removal team knows the importance of respect and trust while in someone else's home. They understand the inconvenience of junk left behind by previous homeowners and tenants, and are determined to provide an affordable and customer-focused junk removal service that puts you first. For a free on-site estimate, just go to musiccityremoval.com. That's musiccityremoval.com.
Yes, Music City Removal, because clutter ain't cute.
Clutter ain't cute.
And sometimes, getting some of these loans approved, it's not that cute either.
Oh, man. I can't imagine the hot seat that you sit in all the time. My goodness.
Yeah. And, one thing, we always suggest is, working with lenders who continue to study and invest into their own craft, right? And that's one thing that my team and I really focus on. And so helping those investors is key. So I have 5 different types of loan products that are out there that are ones that can really be another tool in your box for investors, whether that is you using creative financing just to turn ahead on social media,
which is critical.
or through your email, campaigns. That's something that can be done. Or just knowing when it comes up in conversation, you have that as a tool. So the normal full documentation loan is as low as 15% down. Again, you do have mortgage insurance on that. A lot of investors do the 20-25% scenario just so they can get around the mortgage insurance. If you have a property that your client is looking at that is at least 2+ units, right? So it'd be a duplex or up to 4 units. You're looking at across the board 25% down, just so you know. And
there's no variations on that, right? It's always 25%.
Right. Down. Any 2 unit or above. And so that's not just Carey Ann. So I get a lot of folks that, have been denied down the street, didn't know that. or so-called didn't have enough money, and they come and thinking, we could do something different. That's across the board from the agencies, 25% down, 2+ unit scenario. Now, what's cool is we're direct lenders, so your ratios can be as high as a 50% debt to income ratio.
Wow.
So sometimes clients do just easily qualify. If they need to use projected rents to offset the current mortgage that they're looking at purchasing, they can do that. An appraiser goes out and he does an analysis on the rents within the MLS. And again, remember, what's on the MLS is usually long-term rentals. And so that's the data that they would pull from. They would do a projected rent schedule on that, which comes part of your appraisal. We then take 75% of that and then offset just the mortgage payment. And that helps those folks that possibly are sitting home saying, I don't really think I can qualify for, my first investment property. This may be their option to be able to do that. And again, interest rates on investment purchase are going to be higher than your going rates, right? So as interest rates, rise, you're probably looking between 1 point to 2 points, depending on credit score, higher. But what they're mainly looking for is appreciation of the home, right? And also the cash flow. And there's some great areas that people are flocking to rent. A girlfriend of mine, she does long-term 3-month rentals with travel nurses, right? And with the need of nurses, that's a huge opportunity because those industries actually pay your rent. So, I mean, it's a win-win. You're going to get your rent paid every month. We've got another option for the self-employed. Sometimes the self-employed does not want to show Schedule Cs for different reasons. I love
this one.
Maybe there's too many Schedule Cs.
Maybe because I'm self-employed. Maybe that's fine. But I love this one.
Yeah, but maybe there's too many Schedule Cs. It's just overwhelming, or they can't show their Schedule C because there's a particular loss on it. So we have two options. First option is a bank statement loan. Depending upon if you have personal bank statements or business bank statements, we can look between 12 and 24 months, and then they're going to average the deposit, and that's the income that they're going to use. And the debt to income ratio for that program is again 50% as well. So you got your full doc, your bank statement. We're going a little higher here, where this is a lot more attractive because who doesn't love not providing any income documentation, right? So the no doc cash flow analysis is a huge win. And that program is really turning heads, pausing the scroll, right, or whatever the terminology is, and making people go, what you say?
Yeah.
What you say, right? And so providing no income documentation for an investment purchase. Now, some of us who just want to buy homes in general, we would love to do that, right? Because we can't provide our tax returns for this reason, or we just don't want to. So you're looking between 20-25% down. Credit scores can go as low as 620, which is crazy low. And then you do have to show liquid assets. But this program is based solely upon the cash flow of the home, right? And so the projected rents for that particular home just has to be 112% higher than the current mortgage payment that's estimated. And that's going to be for your escrows and also your HOA dues. But if you're able to put 35% or more down, and some people don't want to, but they just happen to say, hey, my budget is, I want to invest, all the money from this to move over here, then the projected rents will have to be 75%. So there's a lot of flexibility. This opportunity, this mortgage offering is really opening the doors for so many that were even denied down the street. Now, you have to not live in the home. You will sign a form that says this will not be your primary home, and you won't plan to rent into it, or live into it. But it is a great option. Again, gift funds are not allowed on any type of investor home, so that's really important to know. All liquid assets are how many days seasoned? What do you think?
60.
There you go.
I was paying attention in class.
There you go.
Can we step back just for a second?
Yeah.
I mean, I love the information. Don't get me wrong. I don't want to ruin the flow here. But back to the rent situation where you're calculating, offsetting the payment with or based on the rent. Do you think now right now rents are so high, I don't see that as ever an issue anytime soon. But if the rent, or do they ever go back in to recalculate those, or do they just assume when you start that that's what it's going to be, and beyond? Yeah.
So the appraiser is actually going to pull the data on MLS. So as that goes up or down, right, that'll shift what that analysis is. But
as far as the future of having this loan in place.
No. That's just for qualification purposes. That's all for that.
Great.
You can go rent it for higher. You can rent it for lower. You may not even ever rent it, right? I mean, or use it as, meaning gain money on it, income on it, right? You might rent it for somebody for free or whatever. But at that point, is the option. The other thing that I get questioned or asked about is short term, right? the lending institutions, the agencies have not gone on board with short-term yet, right? So it's not like I can pull that data from MLS. I don't know if I can or not.
I don't know where to get it.
There's some agencies that have that data. And if you can gain that data and then get that to the appraiser, he may be able to, or she may be able to work off of that. Because we had a situation just recently where Twins Creek, maybe in Tim's Ford, something like that. Well, somebody within that organization handles the short-term rentals within that community, and but the long-term rents there were $1,000. Off of MLS, right? The average, but the short term was 4,500, right?
Cow.
I mean, it was such a difference there, because people are willing to pay so much.
$1,000 or $1,000 a week. You choose, you know.
Exactly. So we needed to gather that information and then send that over to the appraiser. So that's something to think about too. One program that you really liked was our all-in-one, or our home equity line. It's a first lien option, and you can purchase that with an investment property, which I think is a huge.
About doing that ourselves, you know. I like the idea of how easy it is, and we always have, you know, I don't know, 10 or 20,000 sitting in our checking account just because, you know, we own a real estate company. We want to make sure we're ready, you know. So to have the idea of that working for us really sounds very attractive.
Yeah, and so what he's saying is this particular program, you may have heard out there, there's a lot of buzz around first lien equity lines, which is not a true mortgage. It's a different type of financing option for you. But what we do at CMG is we attach your home finance with your banking. And so we connect that with a checking account, and it's called a sweep account. So every time a deposit goes in, it sweeps over to that particular mortgage, pays down that mortgage. This particular I hate to say word mortgage, it's a finance option because it's not a true mortgage, but you pay daily interest. So as that money sweeps over, it lowers your lien balance, and then the calculation for that daily interest is set. And then again, if you need to tomorrow pay bills, pay a different mortgage, right? Pay your car payment, anything that you have to, then again, that mortgage swept over, it decreased, the lien decreased, and then it increased. And now today's amount that you pay in interest may be a little higher. So then you do an average of all of that, you know, you add it up. That's what you pay each month. So that
having the work money, I'm assuming that this is a little bit higher rate, but the offset of the savings, that it's not just sitting in their checking account, not collecting any value.
Yes.
It's got to be well worth that investment.
Huge, yes. And so it's interest, right, versus an amortized loan. So it focuses on you paying down principal before paying interest, right? So it's a different mindset. So your interest rate's going to be different, but again, compounded interest at 2.25% over 30 years, right? Or even a higher interest daily and focused just on principal. You're going to be paying that house off with that extra money that's just sitting in your checking account. They say about 7 to 9 years, or 5 to 9 years. So depending on how quickly and how much extra money you have in the bank.
Let me ask you this. Is this something you would use personally?
I have it.
That's what I'm saying. Yeah. That's what I'm saying.
Yeah, I have that on my own personal house. And it allows me the flexibility. So just recently when my entire house was collapsing in front of me, I was able to go and pull the equity. That's what's so cool about it. I was able to go pull the equity out to do the renovations without me having to stress about going to get a renovation loan or a refinance loan. So this program allows you to pay your lien off as soon as possible, to do a couple different things. Gain it and use that equity to go purchase more real estate like you're referencing, or have it, for when the kids need to go to college. Like there's multiple different things that you can do. The renovations, you want to upgrade, you want to buy a car, like this is your equity within your own home, which is a huge win. So
a lot of people shy away from HELOC because they don't want more than one loan against their property. To me, this is a smoother way of doing it. Connie and I bought that house that you helped us finance in Florida. Yeah. And the goal has been to pay it off, and we've been working at that. But in the meantime, sometime next year, we're going to have to put another 150 or so in the kitchen. And so we were going to put a HELOC on it. And I said, wow, this makes a lot more sense to do this rather than, and then not to mention if there's a piece of real estate that looks like a great deal, we can write a check for the downstroke on that. It's already ready. You don't have to wait and get the drum up that HELOC at that point.
So you can do it on your primary, or you can actually purchase an investment with it, right? And so when you do it for the investment, it's a 720 credit score with 25% down. But you could, many people, we're helping lots of families right now refinance into this program because it definitely allows you, to consolidate all your debts and really get in a position of truly being mortgage free here sooner than later. So that's another huge win. And lastly, we talk about, hard money. Sometimes I'm not the one that can provide the financing that makes the most sense for you. And so we've teamed up with our friends over at RealFlex that do the hard money option for our investors as well.
It's great hearing from Isaiah in the class. And I think it's a great option. I've been a big fan of Ribbon, which you brought to us a few years ago. Ribbon has saved the deal. They're an awesome company. To have an option now with a little more local look at it and a little bigger buy box, to me, that's even another tool in the toolbox. Remember, guys, we're always trying to equip you with knowledge and resources that you are the go-to person for those who know, like, and trust you. That's part of our goal here, right? For sure.
Yeah, and again, Ribbon's amazing. They just don't focus on the investor. We're RealFlex, and this is kind of what we're talking about today, is just all the investor types of loans that are out there that really make you shine as a real estate agent, because there's going to be people that are going to ask you these questions. How can you help me buy a property that can make me more money? And there's lots of options for you. So I'm excited to help all of those, that are out there looking to do that. And remember, going back to that all-in-one. So let's say you sell a house, and a really big house, and you make $100,000, right? So that $100,000 sweeps down on that mortgage, right? And you don't have a bill to pay until another 30 days. You're only paying interest on that lien amount, right? For that period of time that you have it. And so then you need $25,000 back to go do some marketing or something. So you pull it back up, right? And so you really think about it. You're playing that game of up, down, up, down, up, down, up, down, up, down. And eventually it gets so low and it's paid off. So
Sean, your right-hand guy, is one of the smartest financial guys that I know of.
Yes.
He does that manually. To me, I don't have the brain power for that, but I do like the idea, the concept of it. So I think we're
he's been doing that over, he and I have been together almost 15 years now, and he has almost over 20 properties that he's done that manually, and they're all paid off, right? And again, they're all in different price points.
That's incredible.
And that's a great position, right? If you take the time just to, different, right? So I like seeing my money in the bank. So this was hard for me to grasp, only because I want to grab it at all times. And he reminds me that you can grab it at any time you want, right? And it's still free for you because it's your equity, it's your money. So
but it's working for you.
And it's truly working for you. So if you are a real estate agent out there, to learn more, definitely reach out to your friends here at My Mortgage and be honored to talk more about it just for you personally too. So thanks for joining us this week.
Great topic. Love the information, Carey Ann. Yes. You're a wealth of knowledge, a wealth of resources. Thank you so much for being you.
Hey, and thank you so much, everybody, for joining us. We can't wait to have you come back. You've been listening to the talk of Music City Real Estate.